By continuing to access this site, its content, or establishing any contact with Elliott Wave Live, you acknowledge having read and understand all disclaimers and risk disclosures. The following information described within this video or blog post contains information pertaining to hypothetical trades. These trades were not executed and are for educational or illustrative purposes only. Please read the CFTC Rule 4.41 that's on your screen, and keep in mind, by continuing to use this site, establishing any contact with its author, and or clicking on any of the links, you acknowledge having read and understand all the disclaimers and risk disclosures contained within my blog site. Hello, my name is Mike Sinibaldi, and welcome to this week's video edition of Heard on the Street. In this edition, I'm going to take a look at the following markets: the emini S&P, CAC 40, the DAX, Australian All Ordinaries, Taiwanese SGX, Loonie, and Swiss franc. The first markets that I'll cover is going to be the DAX and the CAC 40. Both markets were featured in last week's video, and I wanted to provide a quick update to everyone. Last week I mentioned that I thought that the 49.62 low would hold. It has, and I'm looking up in this market to possibly the 50% retracement level of 62.98 or 64.12, a level of previous support that should now provide resistance. At the daily chart level, there are several ways to label the chart, and we need to see a few more days of price action to accurately annotate the chart. For now, the waves appear to be corrective in nature. Several areas of interest are just above the market: 58.53, 58.55, 58.72, the previous fourth of one lesser degree, and 59.38. How the market reacts to these levels will determine the wave count from wave 1 low. Look for an update on Monday's edition of the Market Pulse. The next market that I'll cover is the CAC 40. At the 240-minute chart level, I made a case that wave 5 down wasn't complete, and that another round of selling was required to complete an ending diagonal. Clearly, that's not what happened. At the weekly chart level, I've made some changes to the count and provided an alternate count. Both have me looking up in this market, where wave 2 will equal a 0.618 multiple of wave 1 at 36.05, or where wave 2 circle is unfolding and termination point of wave C equals wave A at 43.95.50. At the daily chart level, the preferred count is shown. I'm looking for wave A to terminate near the previous fourth at 32.94, followed by a 3-wave decline in wave B, then a rally that terminates between where wave C equals wave A at 35.93 and the 0.618 retracement of wave 1 of 36.05. A loss of 28.0850 would negate this view. The next market that I'll cover is the E-mini S&P. At the monthly chart level, the March 2008 bar in the 2007-2011 analogy is a doji with a long tail. It's a subtle clue that buyers supported the market. If the analogy holds true, October should be a back and forth month. That's what we would expect if the market is exhibiting a corrective phase. The Santa Claus rally and seasonal trend looks to be in the cards beginning in November, and I'm looking up at this market and bullish throughout the remainder of the year. Dropping to the weekly chart level, we can see that the market nearly kissed my 1066 target, and dropping to the daily chart level, the structure ended in a flawed ending diagonal at 1068. Price has now bounced 87 points, and the 50-period simple moving average is just above the market. At a minimum, I'm looking for a challenge of 1229.75, the previous fourth of one lesser degree. The next market that I'll take a look at is the Australian All Ordinaries. From my Global Gains mid-year analysis, the monthly chart level illustrates my bullish count for this market. In dropping to the weekly chart, primary waves 1 and 2 are complete, and I'm looking for the wave 3 advance. Ultimately, 56.43 is my target, where wave C equals wave A, and here at the daily chart level, wave 3 equals a 1.618 multiple of wave 1 at 48.57. Yet nearby resistance is 42.30, a level that may produce a corrective decline and provide an opportunity for traders. Ultimately, the market will have to overcome previous support, which is now resistance at 5,000, before reaching the higher time frame targets. A loss of 38.43 would negate this view. The next market that I'll take a look at is the Taiwanese SGX. At the monthly chart level, cycle wave 4 terminated in late 2008. We have thrust up in wave 1, and the market appears to be working a corrective wave to the downside in wave 2. Dropping to the weekly chart level, we can see the subdivisions from wave 1 top. My preferred count has wave A of a larger 3-wave decline complete, and I'm looking up in 3 waves. A loss of 243.50 would negate this view. The alternate counts for a completed wave 2. But I believe that's the lower probability play due to the fact that the current corrective phase in relationship to wave 1 is too short and doesn't satisfy the minimal 0.382 time requirement. As such, I'm looking for the 3-wave advance, followed by another round of selling that would extend through December of 2011, possibly into next year. Once wave B is complete, I will calculate the expansion series targets to the downside. For now, 26.50, the 0.618 retracement level of wave 1 would be appropriate level to watch. The final 2 markets that I'll take a look at is the Canadian Loonie and Swiss franc. For the Loonie, the weekly chart level suggests a bearish view. Wave B circle completed in a 333, right into the typical fib retracement level for a wave B within a flat correction. I'm looking down in this market where wave C equals wave A at 72.41, or the reverse Fibonacci extensions of wave B at 69.92 or 65.64. The final market in this week's video is the Swiss franc. At the quarterly chart level, cycle wave 5 completed with a blow-off top, followed by a nasty reversal that has me looking down on this market to the 85 level, the previous fourth of 1 lesser degree. And finally, at the daily chart level, intermediate wave 1 may be complete, and I'm looking higher for intermediate wave 2. Preliminary targets around 128.61 to 129.78. However, the possibility exists for one last push lower to complete wave 5 of intermediate wave 1. Therefore, I'm setting 1.049 as key support. A loss of this level would only be a short-term setback for the count, as a larger degree count is bearish. Let's leave it there for this week. I hope you found this video helpful, and best of trading.